many people maybe think it's a science and it's as much an art as it is a science. I know that's a little bit of a cliche, but it really is. You have to use experience and personal judgment on top of any kind of financial analysis or even strategic rationale. And that comes with time. I mean, you learn a lot by risking your own money. A bit more skeptical about claims by management in funkier parts of the world. I think nowadays I would spend more time assessing the competency of management and whether they're aligned with my interests.
What's the best way to position your portfolio now? Should you be worried about a recession? Do you want to load up on gold, or are stocks still a good buy? And more broadly, is the world drifting towards the political right? And if it is, what might that mean for investors? My guest today knows about all these things and more. His name is Rob Marstrand. He runs a Substack newsletter called OfWealth. That's all one word, OfWealth. And like me, he's worked both on the institutional side and the retail side of investing, 15 years at UBS, And Rob has been living in Argentina for 15 years as well, so he knows quite a bit about high inflation. Rob, welcome.
Hi, James. Good to see you again. Thanks for the
Yeah,
introduction.
it's been a while. Yeah, we worked together a couple of years ago, and it's great to see you across the screen again. Quick lightning round. No need to overthink these. Just very, very top of head questions. Last stock or investment you bought?
Oh, last thing I bought. I don't know. I think it was an online payment. Sort of online payments processing kind of company that's quite high growth, that I think has great potential, and that is basically growing at a really fast clip, mainly through word of mouth of its customers, which is a really encouraging sign. So they're not even having to spend money on marketing. So yeah, because of my financial background, I'm always noodling around for financial sector ideas. Although funny enough, I usually avoid banks and life and pensions companies because they're too complex or have bad businesses.
Yeah, I wouldn't bet against financial payments these days. How would you describe your investing style in one or two sentences?
Well, I'm very much focused on stocks, but I try to keep a balance between high growth and high dividend income, with an overlay, I would say, of a value investing approach. So I don't like to overpay for anything. And then I'm patient and I buy the dips and I wait for things to work through.
Actually, a bit similar to mine. Actually, we're brothers in that respect. Investing lesson that you wish you'd learned earlier.
Oh, goodness. I suppose be a bit more skeptical about claims by management in funkier parts of the world, particularly. Well, actually, in any part of the world for that matter. I think nowadays I would spend more time assessing the competency of management and whether they're aligned with my interests.
Yep. Always easier to make a claim than to substantiate it.
Yeah.
What's something that most people or many people misunderstand about investing?
I think many people maybe think it's a science and it's as much an art as it is a science. I know that's a little bit of a cliche, but it really is. You have to use experience and personal judgment on top of any kind of financial analysis or even strategic rationale. And that comes with time. I mean, frankly, you learn a lot by risking your own money. You'll learn some hard lessons and you'll learn some good lessons.
A great teacher, right?
And there's no other way to do it.
I think economics is a social science, right? And investing is a subset of that. And I totally agree with you. Let's shift, Rob, to Argentina, where you have lived for 15 years, as I just mentioned. It's perhaps a microcosm of other things going on in the world, an extreme microcosm. It's had 275% inflation recently. It's got 57% of people living below the poverty line. This may sound like a simplistic question, but can you first give a little background on Argentina for people who haven't been following the story, and just kind of more personally, what's it like living with inflation that high?
Yeah, well, just very quickly, the country is, for people that don't know much about the country, because why would you if you hadn't lived here? It's the 8th largest country in the world, which means it's just behind India in size. But whereas India has 1.3 billion people, there are only 48 million living in Argentina. 16 million of them live in one city, which is Buenos Aires and its surrounds. So that's about a third of the population. It's got a lot of natural resources, oil and gas, lithium, copper, farmland, obviously. Its main exports are still farm commodities, agricultural commodities. 100 years ago, it was a very rich country. And then it took a very bad political turn with the advent of Peronism in the 1940s, named after Juan Perón, who modeled his initial political model a lot on Mussolini, the Italian fascist dictator. And then Peronism has been everything from quasi-fascism to very hardcore populist socialism along the way, with a few breaks for other parties, including military dictatorships. So it's a country that's basically been beating itself up for 80 plus years. And
Own
particularly,
goals. Yeah, own goals.
yeah, and particularly been beating itself up for the last 20 plus years, since its last major financial crisis in 2001, 2002, when it defaulted on its debt, devalued its currency by 2/3 almost overnight, wiped out loads and loads of people. The policies followed by most of the government since then, which have been Peronist, left-wing Peronists, a particular wing of it called Kirchnerism, which is named after two presidents, husband and wife, Nestor Kirchner and Christina Kirchner, has been to paper over the cracks with currency controls, capital controls, and printing money, because they can't borrow money because no one trusts them to lend. And the result has been, destruction of productivity, destruction of investment, high inflation just rising over. I think when I moved here 15 years ago, inflation was running at, say, 15% a year, which I thought was high, by comparison to a normal
Did you know?
country,
Yeah.
that is high. In January and December and January this year, we were running at 25% a month for inflation. So early December was running at 1% a day, which doesn't sound like much, but if you compound that for 365 days, you end up with something like prices going up 37 times in a year.
So did you spend money as soon as you earn it then? Like, is it hot potato? You just go buy something immediately?
Yeah, basically. Well, I mean, I don't keep a lot of money in pesos for obvious reasons, but people just want to get out of the peso. And we were right on the cusp of tipping into full-blown hyperinflation, which anyone who's studied any kind of financial history would know decimates the population, decimates employment, wealth. You just end up with 95% of people in deep poverty. We were right on the brink of that. And then there's been this kind of political revolution, basically, where suddenly a new guy has come out of left field, actually come out of right field, arguably. And his name is Javier Milei, and he describes himself as what's called a liberal libertarian. Just to clarify that term, liberal does not mean the North American version of liberal, kind of social democrat, slightly left-wing kind of person. It means in favor of freedom, and libertarian is the kind of more North American term for in favor of freedom. So I was watching an interview with him the other day, and he described it this way, which I think encapsulates the overall philosophy. So instead, we're moving from a system where instead of everybody having to ask permission from the government to do anything, we're going to a system where everything is permitted unless it goes against the principle of non-aggression, which is core to libertarian values. So as long as you're not hurting anyone else, you can do what you like. But that's a lot to unwind. They've got thousands of laws to get rid of, deregulation, hundreds of thousands of little regulations to get rid of. There's deep poverty to deal with, and they've got to control the financial system, get everything under control, and slowly open the economy. But I really think this is a massive swing. He's had to cut the size of government massively. The corruption scandals that are coming out daily are just monstrous from the previous government. Just to give one example, to give you a clue, because there's so many poor people, there are a lot of handouts of food. Mm-hmm. So you have these things called comedores, like soup kitchens, basically. In the UK, they would call them a food bank for poor people to go and eat. They've been auditing these. So these are places that were receiving money and or food. And it turns out half of them actually don't exist. So somebody's stealing that produce, reselling it, or stealing the money. So that's just one example, gives you an idea of the deep rot in the system.
Especially sad when they're stealing resources aimed to help poor people.
No, absolutely. And these are the people complaining about the new government. And the reason they're complaining really is because their own piece that they've been stealing has been cut off.
Yeah.
They claim that they were helping the poor, but actually they were helping themselves.
Well, drastic times call for drastic measures, at least how the saying goes. And I'm thinking of a situation in the Philippines. One city had a lot of problems, and its mayor, Rodrigo Duterte, was very brutal. Like, he had these death squads that would just, shoot ostensibly. I can't tell you for sure, but shoot criminals, and without fair trials, and it was not fair at all. But the city got cleaned up very quickly. It was just it was he was effective. He was not fair, but he was effective. I don't think Milei is quite in that bucket, but you know he's a flamboyant guy. Okay, for those who have read about him, he's promised to burn down the central bank. He wants to massively reduce government jobs. On one hand, it seems to be, and so it's promising, right? And I think in January, Argentina had its first public account surplus in 15 years, or almost 15 years. But over the 4 months he's been president, he sort of had to battle with the reality of the political system as well. In the way it's set up, and you wrote a great piece in OfWealth about this that really explains kind of the context. But like, what number would you give him in terms of like what he's done now on a 1 through 10 scale, and what you think he will do, let's say 3 or 4 years hence? Because I believe at the end of 2025 there's another election there, and if he can get some more helpers in Congress, he can really pass more legislation. Am I reading it right?
Yeah, I mean, look, he's only been in place for less than 4 months, so
Yeah.
it's very early days. But what he's achieved already in that time is I think I mentioned the inflation numbers. Inflation is already coming down very, very rapidly. They've stopped the money printing. To give you an idea about the size of the kind of deficit and why there was such inflation, so the government was running about a 5% of GDP fiscal deficit, and that was funded with printed money, basically. And then the central bank, through other financial channels, was pumping another something like 12% of GDP in printed money into the system every year, which, crazy. So in month one, he cut spending so hard that you went from a 5% annualized fiscal deficit to zero straight away, and that's continued. The money supply, the monetary base, has been flat since December. They stopped the money printing dead. They've got rid of, I think, 6 percentage points of that money printing by the central bank that's going into other channels, and they're still trying to unwind a lot of other financial bonds that were left for them, but they're working on it. They're about to put a law to the Congress to reform the financial system, which will encourage and foment investment and lending and private growth. And you mentioned the security issue to do with crime. I mean, this place is not nearly as bad as some other countries in the region, but there are hotspots. So there's a city called Rosario, about 3 hours drive out of Buenos Aires, where there are a lot of violent drug gangs. And they're really clamping down on that for the first time in years. They're getting in there and trying to deal with that. So the three things that the people want, the people voted for, are bring down inflation, create growth, and deal with crime. And those are the things they're focusing on.
Yeah, and inflation is probably 80%. I mean, if he brings down inflation, that's his probably main ticket to popularity, I would assume. That's what everybody's watching.
Yeah, I mean, I think it's going to come down faster than most economists are predicting. I mean, I've seen people saying that next year we might be down to 40% annual, in the whole year, which still sounds extremely high, but it's not that bad when you.
It's all relative, right? It's a good goal.
Relative. But I actually think it might come lower than that, quite a bit lower. And you go a year beyond that, and you'd be down at sort of normal annualized levels.
I believe he's hitting resistance in terms of dollarizing the economy. He's talked about that. Steve Forbes made a 4-minute, a fairly impassioned video praising Javier Milei, but also begging him to not give up on the promise or the idea of dollarizing Argentina's economy. What do you feel about that?
Usually, or at least a couple of years ago, if you'd said to me, any country wants to switch to the currency of another country, I would say that's a really bad idea. But then you see how the peso, the local currency system, is abused by politicians. And you think, well, okay, using the dollar or any other foreign currency has its downsides because you can't control things like interest rates and monetary policy. But on the other hand, it can't be as bad as what we've got right now. So, it's got to be a step in the right direction. Interestingly, but this is an interesting point. Milei wants to pass a law which makes it illegal, explicitly illegal, to print money in future for the central bank. So in future, if the central bank prints money, the president of the country, the president of the central bank, the board of the central bank, and anyone that voted to approve such actions in the Congress would be prosecuted and sent to prison. I mean, this is hardcore stuff.
They become criminals,
So,
but yeah.
yeah, but it's a zero deficit. That's He said that repeatedly. That's non-negotiable. There'll be no fiscal deficit. There will be no money printing, and we want to make that illegal. And we want spent government spending as a share of GDP to be no more than 25%. And I suspect they'll actually want to get that down lower in the future. So, I mean, these are radical measures. When you think about all the money printing that went on in the USA and across Europe and the UK in recent years that resulted in the high inflation as people saw it over there, which it was by normal standards, this is radically going the other way and saying, no, enough. You cannot steal money from people, because inflation is a kind of tax because it destroys the value of your savings. You cannot steal money from the people anymore to prop up your populist political programs. This is unprecedented in the world at the moment, I think.
It's a fascinating experiment to watch from afar. And, I got to say, I mean, it kind of makes sense. Argentina, given how dire things are, they need to do something drastic. So my fingers are crossed. So let me double click on one number you mentioned, Rob, in terms of public spending. Because US public spending is about 36% of GDP. In the UK, it's 44%. France is 58%. Italy is 57%. Milei wants to bring it down to 25% in Argentina. I mean, how realistic is that? Do you think he can do it? Is my question.
I think it is probably realistic. I mean, his basic philosophy is he doesn't want the state taking money from people unless it really, really needs it. And he doesn't have the burden that the US has, for example, of a very high defense budget.
Yeah.
He doesn't have the burden that most of Europe has of very, very high kind of expensive welfare systems. Because believe it or not, the healthcare system here is actually, well, not the state part, but most of it's fairly well functioning because people pay contributions for a kind of health insurance that actually works fairly well for most people. So I think he probably can get away with it. But the crucial part is right now it's slashing the spending. I mean, they've just fired 15,000 people who'd come to the end of their contract in the public sector, and there are strikes going on. The strikes this week. There's going to be more strikes next week. Probably another general strike the week after that. But they've got another 45,000 that are up for contract renewal, I think, at the end of May, and they're all being analysed. Are they actually doing a job that does anything useful? And if they don't, they'll go. And this is a totally new approach for Argentina, and probably for a lot of countries. People actually reviewing, do these people do something that's useful to the populace, to the broader populace? And if they don't, they shouldn't be employed, because we're having to take money from one side to pay these people to do nothing. So it's quite serious cut.
Yeah, there's a certain logic to that. I mean, it makes sense, right? I mean, you can't disagree with that.
It makes sense, but the crucial second part has to be to foment growth in the private economy. So get investment, generate jobs, improve salaries. The salary. I saw some numbers last night on the TV. They were showing inflation between 2018 and February of this year, and comparing prices of lots of different things, and where the currency had gone in that time, and also the average salary of the sort of average person. And I think I calculated that over those, so that what's that, roughly 6 years, less than 6 years actually, the average worker, their buying power in real terms had fallen by nearly 40%. I mean, you just think about that.
It's disheartening.
That's a huge loss of purchasing power and standard of living. So, the growth is the next bit. But for that, they need to have very, very deep structural reforms. He's already trying to reform 1,000 laws. He says he's got 3,000, which he hasn't even told anyone about yet. He wants to get rid of. As you alluded to earlier, I mean, he doesn't have a majority in Congress or the Senate. It's a very odd system here, which I won't bore you with details with. But there are midterms towards the end of next year, and the hope is he can gain enough seats to then comfortably be able to get legislation through that really, really gets into the weeds of structural problems.
Well, selfishly, I'm wondering if it's a very affordable time, or will be soon, for me to travel to Argentina as an American. My dollar probably goes pretty far there. But beyond just me, Rob, to what extent do you think that Argentina is like a microcosm, maybe a small, and maybe an extreme microcosm, an exaggerated microcosm for something that might be happening or poised to happen in other parts of the world too? We've certainly got a lot of money printing elsewhere, not nearly to the extremes Argentina had. Um, but that same principle on a small scale. Do you think that's accurate, or is not quite there yet? I mean, do you think we'll have a snap back to the right, especially if Argentina proves to be a success case?
Um, I would say, I mean, if you look at Europe and the EU particularly, there are clearly some rebellions against certain aspects of what's been going on. So the whole net zero policies with all these farmer protests across multiple countries. So we're seeing a little bit of a populist uprising in pockets. That's just one example. Um, I don't think it's yet a global trend, but I think Argentina is a test case. So it's gone from real populist socialist basket case to now and it's not just he won an election. It's a radical. I believe it's a radical cultural shift where he's brought. The interesting thing is loads of the support comes from very young people who are always assumed to kind of be more kind of socialist end, but actually they're the main ones who got this thing going on social media and all the rest of it. He got loads of votes from young people, including from very poor sectors. But I think it's a test case, and so people are watching intently. And a lot of people, for obvious reasons, the globalists and the big government types, want it to fail. But if it's successful, then it could kind of have a sort of contagious effect, and you start seeing these ideas spreading to some other countries. For now, I don't think it's necessarily a global wave, but it's a start.
Yeah, I mean, and I don't know where I personally fall on this spectrum, but fresh ideas help. Fresh ideas are necessary, and it's kind of cool to see him trying this, and certainly my fingers are crossed.
Well,
Rob,
the brutal truth is, if you look at practically any developed country, um, whether it's Japan, across Europe, and the US itself, Canada, most of them are spending too much money, and they're very heavily regulated. The taxes are too high. I mean, the UK, for example, now has the highest tax burden relative to GDP since the 1940s, and that's under a supposedly conservative government.
yeah, exactly. Yeah.
That's a left-wing government. I mean, so all these countries are going bankrupt. They are on the route that Argentina has been on since the late 1940s. They're heading in that route. Now, how far they're into it is debatable, but let's say they're somewhere in the 1960s. And basically, it's been downhill for Argentina ever since then in terms of quality of life and standards of living. So at some point, one of two things has to happen. Either they have to change track, which is getting a grip on government spending and freeing up their economies to grow faster, or we're going to see, in my opinion, eventually we're going to see a series of sovereign crises, which means there will be massive bond defaults and/or currency crises in a lot of these supposedly rich countries that are actually just digging themselves into bigger and bigger debt holes. So Argentina's been practicing this for years. It's dug itself in a huge hole, and I think it's kind of like when China decided, although China's nominally communist and still an authoritarian state, they moved away from a communist economic model to a capitalist economic model, albeit with lots of government control. And the growth was phenomenal for 20 years. It's now slower, but it was phenomenal for 20 years from the sort of late 90s, or 25 years, late 90s till very recently. I think Argentina has that potential. That if you remove all the stuff that wastes everyone's time every day, the impossible tax system, the currency controls, the limits on imports and exports, the quotas, etc., you get rid of that. You've got a bunch of really entrepreneurial people who mostly come from kind of European heritage, and they're desperate to go out there and make their lives better. And I think the growth will be phenomenal if he can get through this, if Milei can get through this first sort of year or two.
Yeah, you stop shooting yourself in the foot, and good things can start happening. Rob, you sound pretty bearish on global trends. It sounds like, in your mind, much of the developed world is maybe on a slow roll path towards the Argentina situation. Maybe not that extreme, maybe not that quickly, but we've got a little bit of that bug. How do you feel? Let's shift now to personal investing. How do you feel about I mean, U.S., for example, has had a recession on the horizon forever, but it hasn't happened. In fact, we've had this soft landing. And personally, I think people love to beat up on central bankers, but I think Jerome Powell has actually done a pretty good job of, I mean, he didn't do a good job initially. We got much more inflation than we expected. which you probably laugh at given the scale, right? But he did a good job of slowly bringing that down, at least so far. We've got strong employment. Growth is good. Americans are, basically as wealthy as ever. Even the UK is looking. UK was left for dead by many people. It's looking brighter now as well. So I could make the case, or at least there's a position that the U.S., UK, I don't know about continental Europe, but Japan is picking up now that things are looking better. But you don't see it that way. Is that accurate?
Yeah, it's a multi-layered answer. So first, the inflation, in my opinion, both sides of the Atlantic was caused by money printing. So US bank deposits during COVID, because of the money printing, QE, the quantitative easing,
Yep.
US bank deposits went up by something like 25%, of the order of 25%. The result was inflation. And you can't blame it on, by the way, the Russian invasion of Ukraine, because the Europeans have blamed it on that, because they said that caused a spike in oil and gas prices. But that didn't happen in the US, particularly not in natural gas, which is a crucial fuel for power generation in large parts of Europe. So it was created by money printing. And then, yeah, they've realized their mistake, or maybe they haven't even realized their mistake, but they've done something to correct it without really admitting the cause that was the money printing. In terms of US economic growth, I think it's been two factors. It's, on the one hand, it's been that inflationary stimulus, if you like, that excess of money in people's bank accounts relative to the longer term trends of nominal GDP growth.
Mm-hmm.
And I believe that they're about to converge again. So in fact, in reality, the excess money has just run out. We're about to run out. I actually saw a headline this morning saying that US small businesses have the most negative opinion of their outlook for 11 years.
Yeah.
So signs are starting to show up that people are losing confidence. The other thing, of course, is that the US government, and this is not a partisan view, but because it seems to happen on both sides of the fence, is running a huge fiscal deficit. I think it's around 5 or 6% of GDP.
Yep.
That's in a supposedly boom time or a supposedly strong economy. So what happens if there is a big recession later this year or into next year? Does that deficit go to what? 7, 8, 9, 10% of GDP? Who knows? That's a monumental amount of money that you've got to borrow just to keep things propped up. And I think at some point something's going to break. And the same in Europe. I mean, they're still all overspending, most of them overspending. So turning that around to the investment outlook. So if recession is coming, and I think you can never be certain about these things, but if it's coming fairly soon, the typical investor response is to shelter in government bonds. So you buy, 5 or 10-year treasuries. And the idea being that they'll start getting interest rates and yields will come down on the bonds, and then you'll make a capital gain, and then you can sell those later and get into stocks. I think that's probably going to happen. Probably. The question is it this cycle or is it the next cycle where people actually lose confidence in the bond market because they're having to borrow so much new money? And so I wouldn't, personally, I don't want to own bonds long term. Maybe a tactical move for 6 to 18 months, but I wouldn't want to own bonds long term because I just think the system is creaking and eventually it's going to collapse. So I much prefer owning stocks. And as I said earlier, I like to have a combination of high growth and high income, more or less in balance. I switch that a little bit over time, but more or less in balance. And they tend to perform better or worse at different times. So you get that natural diversification. And then I overlay that with, a little bit, depending on the situation. I like to have a bit of gold pretty much always. Mm-hmm. How much is the right amount is very much subject to personal taste. But I would say minimum 5 and maximum, say 20 or 25 would be a reasonable sort of place to be. Gold or gold miners. Gold miners are just a more leveraged play on gold. And crypto, I'm neither a crypto fanatic nor a complete crypto skeptic. I have a little bit of exposure to crypto through an obscure company in Sweden, believe it or not, which I think happens to be run by grown-ups, unlike a lot of the companies which in that sector, which I think are run by children, frankly, in terms of business and management ability. But I think it's worth having a little bit. Why not? But don't make it too much, because one day, when these governments, these big blocs, EU or US, get into really deep financial problems, which means they can't finance themselves except at very high interest rates, or their currency's collapsing or whatever. They're going to do what Argentina's done for the last X decades. They're going to impose capital controls, restrictions on what you can buy and own, all the rest of it. And the US has form on this when they banned people from owning gold back in the 30s.
Yeah, in the 30s, yeah.
So I think eventually we might see that more and more governments ban crypto. And everyone says, oh, well, that's okay because they can't actually get their hands on the crypto. Yeah, but if the crypto becomes an illegal enterprise and you can't get it in and out of the main system of finance, it becomes like a stranded asset. It's like if you owned shares in Gazprom in Russia just before they invaded Ukraine. You lost all your money. That, in theory, you still own something, but it's no use to you.
Effectively, it's locked up. Yeah.
So I'm neither strongly bullish on crypto or strongly negative. I'm somewhere in the middle. I think, just if you want to have a bit of exposure, it's no problem, but I wouldn't go all in.
Well, based on what you said, it sounds like, I mean, verbally you're more negative on the global economy, but in a practical sense, with what seems like a fairly large equity allocation, I mean, I would argue that shows a little bit of bullishness as well. I'm guessing if I'm a just generic middle-aged guy and I come to you, Rob, and this is not investment advice per se, but you might say something like, I'm making this up, but 10% gold, 30% income stocks, 30% growth stocks, maybe the rest, some bonds, gilts, treasuries, and maybe a little bit of crypto, something roughly like that. I mean, more than half my money in equities. Is that
yeah,
about right?
I'd say most of the time, long-term investors, so anybody who's investing with more than a 5-year horizon should have the bulk of their money in stocks, as far as I'm concerned. There's loads of historical evidence for why stocks are the best thing to own long-term. They outperform, pretty much anything else. And there's also loads of theoretical reasons why they perform in that way that I won't bore you with right now. But something like that kind of makes sense to me. Although I'd say whether they're income stocks or growth stocks, just make sure you're not overpaying. So price to earnings ratios are not an absolute thing. There's, growth and value are not independent variables. So something growing at 25% a year is worth a much higher multiple than something that's growing at 3% a year and paying you a 10% dividend yield. So you've got to take that into account. The other bit you mentioned, I mean, look, it's always worth having a little bit of cash. And cash includes, under my kind of definition, cash is basically something you can easily liquidate to buy something else. So I would include in there short-dated treasury bonds and bills that have very little price volatility but pay you a bit of interest income, and obviously deposits, bank deposits, which pay you interest income too these days. Finally, thank goodness. But then it's down to personal taste. But yeah, I would say most people should have most of their money in stocks. I certainly do. I have a few quirky things in I have quite a concentrated portfolio. It's usually 15 to 20 individual stocks at varying weights, according to what I think their potential is over 3 to 5 years, and my confidence in those businesses. I think there's a lot of rubbish out there, a lot of garbage stocks, and you have to be very, very, very selective.
I think 15 to 20 is a good number because it's a number that a regular human it's about the biggest number you could keep track of yourself. I mean, there's all kinds of theories, and no one's going to ever know the right portfolio because you'd have to know the future to do that. And if you knew the future, you would just buy like the one stock that'll go up the most, right? So I don't think portfolio theory is ever going to be a nut that's fully cracked, academically speaking. But on a human level, I think 15 or 20 stocks is about right for what people can realistically follow.
Well, yeah, I mean, if you own, just hypothetically, let's say you own 20 and that was 80% of your portfolio, so you have a really heavy weighting to stocks. You've got 4, and you own them equally. You have 4% in each. And it's very rare, unless you're buying companies with too much debt or just always making losses, it's very unusual for a company to go completely bust. So that 4% won't go to zero on each one. But there's a risk, obviously, that anyone might do something stupid or they get into trouble. So you might lose 2%. Is not a lot of risk on a single investment. When you could be making, across the lot, you could be making 10, 15, 20% a year if you're picking them the right way.
Yep, and a bet on stocks. I mean, we could get all kinds of reasons for this, but basically, it's a bet on human progress, right? These companies represent the progress of humanity, and in general, starting from the Stone Age, mankind has done a pretty good job of making progress over the years. So you're betting on that writ large.
I mean,
Rob,
I would say a couple of important things. One is I'm pretty strong that I don't invest in companies that have loads of debt. So I want companies with net cash positions or low debts, or sometimes they have a bit of debt, but they have very, very stable cash flows. They're in those sorts of industries that don't fluctuate very much with cycles. So I avoid debt at all costs, don't overpay. And, if you're only running 15 or 20 positions, you have to rigorously make sure you diversify between them. So they're not all operating in similar sectors, or let's say they're not all in the high growth NASDAQ.
Yeah, you don't buy all semiconductors or all utilities or something.
It's got to be across a really actively diversified range of things. And even where they do business in the world, where they trade on which stock markets, all that kind of stuff helps to ensure that you're not going to get blown up and destroyed.
So you're kind of a citizen of the world, Rob. You are facile in multiple markets, especially UK and US. Within the US market, because that's what we focus on at BBAE, what can you give us one or two names or one or two investments that you're taking a special interest in now? Not recommendations per se, but stocks you're watching.
Well, I don't know if I can give you a name of something I'm watching. I mean, I have recently written up a very exciting high growth company that is listed in the US market, which is only available to subscribers of my newsletter. But when I look at the kind of US market in general, the macro indicators of valuation ratios and things say this is a very expensive market in historical terms. That said, you go down to the Russell 2000 or whatever, and it doesn't look that expensive. It's not that bad. But what you don't know is how many of those companies have got themselves into too much debt over the years with all these super cheap, borrowing. It's the kind of Mag 7 we talk about a lot. But actually, if you look at the Mag 7, they're not all doing brilliantly. Nvidia's going through to the moon.
Yeah, it's more like Mag 4 now. Yeah.
Yeah, but you look at like Tesla, and it's actually been going down for a couple of years, I think. So it's not all amazing. But I've got no doubt that the US market is 60% roughly now of global market capitalization, so global value of stock market. And the next one after that's Japan, which is tiny by comparison in the UK. So the US is a dominant market. So of course you have to look at the US market. I'm a bit nervous, given that if it turns out to be right that recession is coming soon, typically earnings per share at the index level will fall quite sharply in any recession, maybe 20-25%, and stock prices will fall more than that. So I would say at the index level, you need to be pretty cautious in the US. But within the US, of course, there are loads of great companies, and if you look around, you can find good prospects. I'm just writing up one this week, in fact, which operates in the field of cybersecurity. It's one of the leaders in that market, and I'm about to send that out later today to my readers. And do I think it's super cheap? No. Do I think it's overpriced? No. It's probably somewhere around kind of fair value. But if the thing's growing at 20-25% a year, that's fine. I don't have a problem with that.
I mean, nobody would have, or few people would have a problem with that kind of growth. Rob, let me pin you down on one thing. So in terms of, you mentioned small caps. And last year was an exception where only 24% of stocks in the S&P outperformed the broader index. That's the lowest reading ever to my knowledge. In other words, most stocks lagged, and you had these 7 big ones that were, they were doing all the rowing or most of the rowing.
And the market's also very highly concentrated in a handful of top. I think
correct.
I looked at this recently. The S&P 500. I think the top 10 stocks are something like a third of the index, and the Nasdaq 100, the top 10 stocks are something like 45% of the index.
And those numbers are abnormally high. Normally it's not like that. In fact, normally the equal weight S&P outperforms the regular market cap weighted S&P. It certainly did not happen last year. And one of the reasons is small caps lagged. And one of the reasons is that they have higher debt, much higher debt than large caps. And a lot of that debt is variable rate debt. So they got hammered when the US Fed started raising interest rates. So one perspective is that rates are going to come down now, and small caps are going to disproportionately benefit and finally return to their rightful positions as slightly outperforming large caps. Another perspective might be, if you're right about this recession coming along, that small caps, are much more domestically focused in their businesses. And so if the US has a domestic recession, small caps will be hit the hardest, presumably. So you got a positive and a negative, and that's not uncommon in the markets, right? There's always reasons for and against something, but where do you shake out on those two things?
Well, I mean, I'd say in if you're looking at domestically focused small caps, I would focus on deep value personally.
Hmm.
So you want to look at stuff that's already trading at incredibly low kind of valuations, hopefully pays a dividend, or they're doing big stock buybacks at very cheap prices, which is great for remaining shareholders.
Yeah,
Um, uh, I'd also add this: just we talked about the Mag Seven a little bit, and how there's very much concentration, and there are certain areas of the market which I think are pretty pricey. Let's face it. There's an area which I find extraordinary is the big consumer staples companies, the kind of P&Gs of the world, the
yeah, yeah.
Coca-Colas of the world. The one these are
American Pink guys,
huge
yeah.
these are huge global corporations that are basically very mature and have very low growth, and yet they're trading at PE ratios in the high 20s or low 30s typically. I think that's incredibly overpriced. They should be trading maybe around 20, let's say, for something like that in this kind of 4% ish
Yeah, yeah.
on yieldy interest ratey sort of world. So I'd be concerned about owning those. What do you get? You get low growth. You get them doing stock buybacks at high prices, which is a waste of money. You get a relatively low dividend yield. What's the attraction of that? You've only got really downside risk. So I'd be cautious about those as well. It's not just the kind of techie, exciting new big Mag 7 type of stuff.
That's great. So you shared some stuff you like, and maybe something you'd be a little cautious of. Rob, if someone is watching this and says, "I would like more, possibly much more of Rob Marstrand," where would you send them? How can they find more about you?
Yeah, so I write a newsletter called OfWealth, one word. Think of it like Of Mice and Men, like the book. Um, and it's on Substack, which is I don't know if people are familiar with that, but it's an app. But basically, subscribers get emailed anything I write, and or they can look at it on the app. The website is called OfWealth, one word, .substack.com. Hopefully, you'll put the links
Yep, I'll
in.
put a link up for you. Yep.
Um, and I write about some macro stuff. I'm also writing an investment book, which I think is slightly different to most of the ones out there. That is like it's hopefully something that becomes a kind of manual for any private investor that wants to think about all the things they have to remember. I'm currently writing the chapter on risk, which is a very complex and often misunderstood subject, with the aim of making it very, very accessible to anyone who doesn't have a financial training, such as myself. So it's all about making it readable. And so I try and do about a chapter a month on that as well as the stock analyses and the macro stuff and gold and all the rest of it.
Sounds great. Sounds great. And maybe when I come down to Argentina to spend my U.S. dollars, you can give me an autographed printout of the book or copy, something like that. Uh, Rob,
Yeah,
it
bring your
is.
dollars to Argentina. We need them.
Yeah, yeah, I'll try. Rob, it is always a pleasure to chat with you. Very enlightening. And you're living, kind of in the eye of of the tornado, eye of the hurricane. We'll see what happens. My best wishes, and hopefully things go on the upswing. And hopefully that's a lesson that can be sort of, or can reverberate around the world, and we all can all learn from what happens there. Thanks again, Rob, for
Yeah, well,
joining us.
well, well, good to talk to you, and I'll certainly be updating people from time to time when we have significant developments. But I'm for the first time, I'm mildly optimistic about Argentina's future. And in fact, my next project is to find a way that foreign investors can get exposure to this through the stock market, this potential economic boom. But it's not an easy task to achieve. But I have a pretty good idea that I'm working on.
That sounds exciting. Maybe I'll invest a little bit in that. Turnarounds are always great. Rob, thanks again for joining us. And guys at home, thanks as always for watching us too.